You can't expect the family not to give it a thumbs up, presumably, because if your family gives a thumbs down to the budget, then you're in serious trouble. But clearly opinion divided at the moment. That's very clear. It's not the kind of budget. Maybe we expect too much out of budgets. And I think that's partly the problem. We expect budgets to, in a sense, compensate for the other failings that we have in our economy. That's what you've been saying, Manish? That we place this excessive importance.
It's a progressive decline of the importance of the budget. It's moving to what it should be, which is an accounting statement. The making it the bully pulpit or the platform for declaring reforms, which need to move to being a dial tone rather than an episodic event. I mean, the birth defects in our labor market need us to make announcements every week, every month for the next 10 years, and we still won't be done. So the notion that every end of February you'll make an announcement and you'll implement it over the year is just delusional.
So the real challenges could come in March, April. I mean, he spoke, for example, he didn't use the word, I didn't hear the word GST, but he certainly spoke about the bankruptcy code. He spoke about the need.
He did mention GST.
But he without giving any kind of commitment as to what's actually going to happen to it.
No,
so we don't.
He can't.
So there's a question mark. There's a question mark over the fate of important legislation, which could, in a sense, back up perhaps this drive towards reform. I mean, real reform need not come through the budget. It has to come post the budget. In that sense, he's only giving some kind of a vision statement, and maybe the criticism in the past was that he wasn't spending enough time on focusing on the poor, the farmer, and those who felt left out. This time he spent more time on that.
But there are many decisions which get taken by the government in the normal course of work which are disastrous for farmers. And it's about policies they announce which parliamentarians don't understand. They don't bring it up in the parliament, and it's those kinds of decisions which affect farmers more. And that's why I agree with Manishi, because when he says that this is not as important as it's made to appear, this budget, because I think so we need to focus more on the decisions that happen few months on either side of the budget.
Let me get my tax expert, since I'm more worried about that. What do I have to do in terms of income tax at the moment? Our correspondent Sanket Upadhyay has been speaking to tax experts to try and understand what has Arun Jaitley done on the direct tax schemes. Let's listen in.
Now the union budget has been presented, and there are words which really matter to you at this moment, and we are simplifying it in the form of these tax classrooms that we usually hold from year to year. What do we talk about? Section 80C, something which is a pretty common concern of a person who's paying tax, PPF, home loan. What really does the budget have in store for you, the direct tax payer? We have Mr. Divya Baveja with us. Thank you very much, sir, for joining us. You're a direct tax expert. You'll be able to tell our viewers, how does life get affected? I want to start by asking you, does life get affected by this budget or not?
Okay, so when I look at the life getting affected, the finance minister did not talk about anything on the slab rates or the slabs. So I'm assuming that the slabs have remained constant, much to the popular expectation that the slabs would go up.
Let's make it easy for our viewers. If we could move to this board and you could use this and actually explain what is happening.
So what happened is that if we look at the current slabs, we have income from 0 to 2,50,000, which is currently the tax rate is nil. From 2,50,000 to 500,000, the tax rate is 10%.
Okay.
From 500,000 to 1 million, which is 10 lakhs, the tax rate is 20%.
Okay.
And beyond 1 million, sorry for my handwriting, is really bad, the tax rate is 30%.
Okay.
And then over and above, there's a surcharge which was there of 10%. And for people who are having income over 1 crore, the surcharge was 12%. And then there was an education cess at 3%.
Okay.
So what the budget has in store,
this is what was there.
this is the existing slab for the current year.
Okay.
Going forward, the way when we hear the speech, this all remains the same.
The way it is.
There is no
Which
change in
means
this.
If your salary is 2,50,000 rupees per annum, remains the same.
Nil.
250 to 5 lakhs
10%.
remains at 10. 5 lakhs to 1 million stays at 20%.
More than 1 million
and above, 30%.
Absolutely
what
right.
changes then?
Now what changes is there are two changes. One is that if any person is having income up to 5 lakh rupees, earlier under section 87A, there
What
was,
section is this?
this is a section which gives a rebate of anyone who has income up to 5 lakh rupees
Okay.
from a deduction of tax.
Okay.
The limit was earlier 2,000 rupees, which has been now
By the way,
increased
for
to,
perspective, these income slabs that you're referring to are per annum.
they are per annum, yes. So for under 87A, earlier any person having income up to 5 lakh rupees, there was a deduction from the income tax, which was 2,000 rupees, or the tax paid, whichever was higher, and or 5,000 rupees, or the tax paid, whichever was lower actually, or limited to 5,000 rupees. Now this has now gone up to 5,000 rupees from 2,000.
Okay.
So that is one
The
change.
rebate is more.
Is more now. So earlier it was limited to 2,000. Now it has got increased to 5,000 for income up to 5 lakh rupees.
Okay. Okay. What else has changed?
Now the
Has
key
changed
thing
number
which
one.
has changed is that anyone having a person income over 1 crore rupees,
crore rupees per
the
annum.
surcharge was 12%.
Yeah.
This has been now changed to 15%.
Oh, okay. 3% jump.
3% jump, which effectively means that if an individual is earning more than 1 crore, so if I take the scenario, earlier he was paying at the rate of almost 34.6%. This with the increased surcharge goes to about 35.5%.
So the richy rich
Will pay
will have to
extra
pay
now.
About the sum total will be about
0.9%, close to 1%, yes, yeah.
Okay, okay, that's significant.
So two important things I would like to repeat. Under 87A, anyone earning income up to 5 lakhs, the earlier deduction was 2,000, limited to 2,000, now it is 5,000, which is a small relief. For super rich, over 1 crore, the surcharge increases from 12 to 15%, which means my tax rate effectively goes up to 35.5. Also for super rich, earlier, if suppose they get any dividend, so there was only one dividend distribution tax which was paid. Now, if the dividend is more than 10 lakhs, there's an additional 10% dividend distribution tax. So I would say this budget has, looked at taxing the super rich, be it in terms of surcharge or higher dividend distribution tax for them. And also indirectly, they have also increased the tax on the cars above 10 lakh
Which
rupees.
is again going to affect the
The super rich, yes. So I would say what came out in the economic survey, which was released last week, that there's a lot of benefit being given to super rich, and that should be taken away, be it in form of subsidies. This is a step in that direction.
Okay, Divya Babeja, many thanks for joining us
Okay,
in the
thanks.
tax class.
Yeah, thank you.
Okay, Sanket there with a tax expert. All the super rich around this table, you're in trouble. You're going to pay more. That's why you're worried about the debt.
Absolutely.
But this is Thomas Piketty all over.
Yeah, can I
You
make
got to
one-
pay the super. You've got to tax the
Can I
super
make
rich.
can I make one point?
Yes.
To say that I think I'm in favor of doing more taxation of the super rich.
Yes.
Whether you put me in it or not,
Yes.
I don't care. I don't think I am, but forget it. No, I think that don't just take direct taxes. If you absorb some of the indirect taxes that has been done, aside from the usual tobacco smokers and all that, I think on vehicles. There is this sort of fuel.
There's a
related
tax if you purchase a vehicle which costs more than 10 lakhs. Now
and
you'll
all
be
that.
end up paying a little bit more.
I think it's all there is little bits basically socking a little more taxation, and we don't know how much it is until we look at the numbers.
But
out
he
of the
needs to
super rich.
collect revenue.
Absolutely. No. I'm saying this is plus. I'm saying this plus from my point of view. If you're having a hard time on the fiscal side, I'm not saying this is negative. I mean,
Yeah, okay.
that's one. Second thing, I think we should give him credit. Also, the dog that didn't bark, which is sort of mentioned here, that the exemption limit wasn't raised.
That's right.
Which is a very popular thing. Everybody likes to see that, but that's all economists almost would say, don't do that because that's how you cut away at your tax base.
So he's kept the tax base intact,
Yeah.
which economic survey wanted it to be widened further, but at least he hasn't done anything.
No, the economic survey said it should be widened.
The economic survey
No.
did say
No,
they
no,
wanted a larger tax base.
Yeah, they wanted
They wanted a
reduction.
larger tax base.
No. What the economic survey said, that resist the temptation for, I'll just read it for you, I've got
Yes.
it here, of expanding the tax base for the following reason. This allows the number of people paying taxes to automatically go up. So therefore, when you expand it from 2.5 lakhs to 3 lakhs, you're missing out the newcomers in the 2.5 to 3 lakhs category.
Okay.
The other thing that the economic survey said was that if you look at our direct taxes as a percent of GDP, as well as personal income tax as a percent of total tax revenue, it's higher than comparative countries. So this was the other thing. So you can bring in Piketty. The only time the Piketty thing comes in is where the economic survey says, well, let's look at total number of voters rather than the total income.
I take the point.
So the economic survey was...
You've also, Shankar, and we'll get you this, where is the 20 lakh crore going to come from?
20,000 crores.
20,000 crores of indirect tax revenue, additional revenue coming from.
Yeah.
We are still not sure where that's coming from.
Let me just... This is very on that point. The issue has been raised, what happens if oil prices go up?
Yes.
Because you're losing your tax revenue. It turns out that for the last year, the average price of oil was about $46. So until we get to $46, right, we're actually gaining more taxes from
Right.
oil. Unless they reduce the oil tax. So in other words, we can go up to 46 and still have the same amount of oil taxes that we've got this year. You've got to be very careful when you say, oh, oil prices go up, but the average price was $46 last year. Right now it's about 33,
What's
34.
the big message that the finance minister has sent out? That's what we want to really find out. What's the big message that he's sent out? We've heard from tax experts. We're hearing from our panel here in the studio. Has Arun Jaitley, in a sense, tried to strike a balance between concerns over the fiscal deficit going out of control and, of course, the need for public spending and kickstarting the investment cycle? Has he struck that balance, or has he veered too much to one side? That's the question we'll raise when we return.